Hi everybody, this is Bob Iacchino. As always, I'm joined by my co-founder of Path Trading Partners, Mike Arnold, and this is a weekend Path Chat for the week of June 25th, the week beginning June 25th, covering the FX markets, and I'm also going to do the usual week in review and then preview the economic calendar for the coming week. So let me start with the week in review. Crude oil finished the week down almost 4%, about 3.8%. And we are now in bear market territory for crude oil. Bear market defined as a 20% drop from a most recent high. And crude oil's most recent high was 58.30. And we've fallen in excess of 25% of that now. So we are solidly in bear market territory. We had daily closes in bear market territory. And as of Friday, we had a weekly close in bear market territory. So guess what? Crude is in bear market territory. This decline in energy is going to make it a lot more difficult for the Fed to continue with the talk of trimming the balance sheet and with the talk of a third rate hike, because this will put a lot of downward pressure on overall prices. Granted, we get a CPI ex food and energy, but the cheaper energy will decline prices in other areas where energy is used. So it's going to have an extended effect, especially if this is a bear market and we get an extended down move. Overall, production from the U.S. is still high. We're at about 9.1 million barrels a day, so we fell off a little bit in total per day barrel volume. And OPEC, while the OPEC members have exceeded their production cut and they continue that production cut, the non-OPEC members are only running at about 94% compliance. And the three countries, Nigeria, Libya, and Iran, with exemptions, have upped production, and Iraq has been cheating. So we've got a lot of supply factors. Also, demand for crude oil flat. So things don't really look that good for the price of crude oil unless something changes. Brexit talks are underway. The negotiators from the UK and the EU met on Monday. That was the first formal negotiating session. The one breakthrough from the talks was the UK's acceptance to the EU demands that a divorce bill must be paid. They called it a divorce bill in some of the news that I watched about it. I'm not sure if that's what they're calling it in the meeting. But a divorce bill must be settled before the EU begins to negotiate new trade arrangements. So they're trying to decide on what the amount of that bill is that the UK has to pay. Theresa May met with the EU leaders in Brussels. She laid out her plan to protect the rights of 3 million EU citizens living in the UK, allowing them permanent residence. May called on the leaders to grant British citizens living in the EU the same rights. Still some discussion between the members of the Bank of England, informal discussion on whether they should hike rates or not. UK growth has suffered a little bit of a downturn lately, but inflation has surged, mostly because of the fall in the pound's exchange rate. So they're kind of importing inflation. So rising import prices have pushed consumer prices up to 2.9% versus year ago levels. We had that 5-3 split that we've talked about. It was supposed to be a 7-1 split on the vote to keep rates unchanged. Bank of England Governor Mark Carney, though, made the case that now's not the time for rate hikes, given low wage growth and mixed signals on consumer spending and business investment. China gets the nod from the MSCI. After years of fighting for inclusion in the MSCI's stock indices, China finally received word that some of its A shares were going to be included in the indices in mid-2018. So just fewer than half of the 448 A shares will be included in the indexes, and an initial weighting of just 5% of each stock's market cap is what they will be placed in as. These restrictions are an effort by the MSCI to incentivize China to further liberalize its stock markets. Fed Governor Jerome Powell, amongst a lot of Fed speakers that we had this past week, told a congressional committee that U.S. regulators have room to relax or eliminate some aspects of the Volcker Rule. Now, the Volcker Rule is intended to limit banks from investing speculatively with insured deposits, so getting in investment bank deals, and regulators are looking for ways to simplify the complicated rule, and it may exempt small banks from having to comply. This is more something that's restricted the growth of small banks. The mega banks that people talk about breaking up have so much income and so much revenue flow from other businesses. This hasn't hurt them much, but it has hurt local banks. U.S. Treasury Secretary Steven Mnuchin this spring floated the idea that the United States is considering issuing very long-dated bonds. This week, he said the government will only issue ultra-long maturity Treasury securities if there's a sustained appetite for these securities. Mnuchin said that the department is reaching out to investors in order to gauge demand for instruments with maturities between 50 and 100 years. But any move to issue very long-term debt would not be a one-off. So apparently there's at least some investor demand for long paper. Argentina has been issuing 100-year bonds this week. Despite having defaulted 6 times in the last century, there's still people buying Argentinian 100-year bonds. Argentina's issue, although rated below investment grade, was oversubscribed, heavily oversubscribed. So I'm sure there's an appetite for U.S. ultra-long-dated bonds, but Mnuchin is saying we're not going to do it unless it's going to be a regular thing. We're not just going to do a one-off just to raise some short-term cash. U.S. banks cleared their first round of stress tests. 34 U.S. banks passed the first round of the Fed's stress test this week. Next week, the central bank will announce whether it will allow banks to return capital to shareholders. Some banks may begin to reduce their capital if the Fed approves. Now, markets could take this as a sign of confidence. The banking system is strong. You could see banking stocks go up. You could see the dollar rise, even though that would be more dollars in circulation. That would be a really good sign for the stability of U.S. banks, and it would have people demanding more dollars as a secure sort of a store of money. That's really about it. We had a lot of Fed speakers. It was very mixed. Some hawkish comments by who you would expect and some dovish comments by who you would expect, like Charles Evans, for example, with the dovish stuff and Harker with the hawkish stuff. But it was just a mix. There was nothing really imminent, and the next rate hike, if it is even going to happen, is so far off from a time perspective that it's not likely to have any effect. Let's take a look at the economic calendar. Starting with tonight, Sunday, June 25th. In Japan, the Bank of Japan's summary of opinions from their June 15th and 16th meeting. Those minutes will be released at 6:50 tonight, Central Time. That's it for Sunday. June 26th, Monday. There is an ECB forum in Sintra with Draghi, Bank of England's Carney, and Bank of Japan's Kuroda. Also, Draghi and former Federal Reserve Bank Chairman Ben Bernanke are giving a speech together, so that'll be interesting as well. Also at 3 a.m., German IFO business climate for June, German IFO expectations for June, and German IFO current assessment for June. Business climate expected at 114.5 versus 114.6 last. Expectations 106.4 versus 106.5 last. And current assessment 123.2 versus 123.2 last. You've also got in the UK, 3:30 in the morning Central Time, the BBA loans for house purchase figure expected to be slightly lower than it was last month. This is for May, so it's a little bit old data, but it is for May. 7:30 in the morning US, durable goods orders for May. It's a preliminary. We're looking at down 0.6 versus down 0.8 last. And ex-transportation durable goods up 0.4 versus down 0.5 last. So even though the headline number is usually the more important number, it seems to me that the ex-transportation is going to be a little bit more important. And then at 10 a.m. Central Time, there's an ECB youth dialogue with Mario Draghi in Lisbon. So he's moving around on Monday. Tuesday, June 27th, 5 a.m. Central Time. Bank of England's Carney speaks at a financial stability report press conference. Again, that's 5 a.m. Central Time. 8 a.m. Central Time. S&P Case-Shiller Composite Index year over year for April expected to be up 5.9% versus up 5.9% last. That is for April, so that is very old data. Then we've also got the Case-Shiller U.S. Home Price Index year over year for April. Expected to be 5.8. It was 5.8 last. That is unchanged. Again, this is for April, so it's pretty stale data. 9 a.m., consumer confidence for June. That's the government's number, 116 versus 117.9 last. And then at noon, Janet Yellen speaking on global economic issues in London. That is 12 noon Chicago time. Wednesday, June 28th. Midnight, Japan's small business confidence for June, expected at 49 versus 48.9 last. We've got in Switzerland, The UBS consumption indicator for May, no estimate on that. That's coming out at 1 a.m. Then at 6 a.m., MBA mortgage applications for June 23rd in the U.S. No estimate on that. 7:30 a.m., advanced goods trades balance for May expected to be down 66 billion versus down 66.7 billion last. Also at 7:30, wholesale inventories in the U.S. for May. That's expected to be up 0.2 versus down 0.5. Remember, inventories are part of GDP. 8:30, Bank of Canada's Stephen Poloz at an ECB panel. 9 a.m., U.S. pending home sales year over year for May. No estimate on that one. The usual 9:30, Department of Energy, the EIA, U.S. crude oil inventories for June 23rd. And at 6:50 p.m., Japan's retail sales year over year for May. Large retailers sales for May. Loans and discounts year over year for May. Japan foreign bond buying in yen and Japan foreign stock buying in yen. The only two of those we have an estimate for. The retail trade year over year is expected to be up 2.8%, and the large retail sales and the large retailers' sales for May expected to be down 0.4%. Then at 8 p.m. Central Time, Australian new home sales month over month for May. No estimate on that. Moving on to Thursday, June 29th. Tons of data on Thursday and Friday this week. Starting at 1 a.m., try and keep up. GfK Consumer Confidence Survey for July, the German data. Expected at 10.4 versus 10.4 last. UK net consumer credit and net lending, 1.4 billion sterling on the net consumer credit, and the net lending 2.6 billion sterling versus 2.7 last. Mortgage approvals as well. This is all 3:30 a.m. by the way. UK mortgage approvals for May expected to be 64,000 versus 64.6 last. Then 7 a.m. Central Time. German Consumer Price Index month over month and year over year for June. Month over month expected to be unchanged, but year over year expected to only be up 1.4 versus 1.5 last. Then at 7:30, U.S. gross domestic product annualized for the first quarter expected to be 1.2 versus 1.2 last. Personal consumption expected to be 0.6 versus 0.6 last. Product price index and personal consumption expenditures, again, all at 7:30, 2.2 versus 2.2 and 2.1 versus 2.1. This is a revision of the last number. That's why no changes expected between this current number and the last. Then same time, initial jobless claims expected to be at 240 versus 241 last, and continuing claims 1.932 versus 1.944 last. Then at 6:01 p.m. Central Time, GfK Consumer Confidence Survey in the UK for June expected to be -7 versus -5 last. Jobless rate in Japan expected to be 2.8 versus 2.8 last. Household spending year over year in Japan for May, so May over May, down 0.5 versus down 1.4 last. And of high importance, consumer price index year over year for May in Japan. That's 0.5 expected versus 0.4 last. This is all, again, 6:30 p.m. Central Time. We've also got Japan's consumer price index ex fresh food year over year is expected to be up 0.4 versus up 0.3. Japan's industrial production comes out 20 minutes later, 6:50. Year over year numbers, 6.8 versus 5.7 last. And then, 8 o'clock, China's manufacturing PMI and non-manufacturing PMI. Manufacturing PMI is expected to be at 51 versus 51.2 last. No estimate for non-manufacturing. Then 30 minutes later, 8:30 p.m. Central Time, Australian private sector credit year over year. Expected to be up 5% versus up 4.9% last. And Friday, June 30th. Midnight, Japan's housing starts year over year. Expected to be down 0.7 versus up 1.9 last. 1 a.m., German retail sales year over year expected to be up 2.8 versus down 0.9 last. Switzerland's KOF leading indicator for June expected to be 102.5 versus 101.6. That's at 2 a.m. Then at 2:55 a.m. Central Time, German unemployment change expected to be down 10,000 versus down 9,000 last, and their unemployment rate expected to be 5.7 versus 5.7 last. 3:30 in the morning, UK's gross domestic product year over year first quarter final, 2%. That'd be unchanged versus last. 4 a.m., Eurozone Consumer Price Index estimate year over year expected to be up 1.2 versus 1.4 last, and the core year over year expected to be up 1% versus 0.9% last. Then 7:30 in the morning, Canada's GDP month over month for April, and their GDP year over year, April over April, month over month expected to be up 2 versus up 0.5, and the year over year for Canada 3.3 versus 3.2 is the estimate. Continuing with that 7:30 time slot, U.S. personal income for May and personal spending for May up 0.3 versus up 0.4, and up 0.1 versus an expectation of up 0.4 on the spending side. U.S. real personal spending for May expected to be up 0.2% versus 0.2 last. The personal consumption expenditure number, the core number, month over month and year over year, also coming out at 7:30. The year over year is the important one, expected to be up 1.4 versus 1.5 last, and the month over month 0.1 versus 0.2 last. 8:45 a.m. Chicago Purchasing Managers Index for June, expected to be 58 versus 59.4 last, and the University of Michigan Consumer Confidence for June, expected to be, it's a final number, expected to be 94.5 versus 94.5. And then at noon, U.S. Baker Hughes rig counts. 23 consecutive weeks now of rig count rises. Total gas and oil rigs now at 941. Total gas rigs at 758. 760 is where we were at April 2015 for oil rigs. Did I say gas rigs? Oil rigs are at 758. And that's the highest since April 2015 when we were at 760. Anyway, that's it for the review and the preview of the economic calendar. Let me turn it over to Mike to let you know what he's seeing on the charts. Mike, it's all yours.
Thank you very much, Bob. Euro, US dollar. Rising trend line, which was a redraw, has held. Pushed up to retest the 12.5, one of our 12.5% GAN levels, 12.05, found some resistance here. If we can get up above a defining point on this upper trend line, which is coming in at 12.12, then we will have a potential trade that can take us to 112.77 area. You're going to have some intermediate resistance before that at 112.36. So rally on Monday, first level resistance 112.05, then we'll be watching for that 12.12 level, 112.12, then that 112.36, then possibly all the way up eventually to the 112.77. Might have to refine that a little with this declining trend line if it does unfold and we get a close above that defining point. If it does pull back, this lower trend line now is very key. You can see all the touches or near touches to it. So this is a very key levels down here. 111.45 first level, then 111.37, 111.24, 111.14, all those key levels to the downside. If that is eventually broken, then we're going to watch for a fall to 110.91. Pound US dollar, nice 3-day rally, redrawn trend line to the downside. If it continues to rally on Monday, 127.34 first level, we're watching for resistance at 127.44. Then we'll watch for a rally straight to the 127.69, which is also the end of this clear path move. If we do get through that, 127.83 is going to be very key. If it does pull back, looking for some minor support coming in around the 126.80 to 86 level. Then we'll be watching for the 126.53 level, then a possible return to 126.37 on a bigger pullback. US dollar, Japanese yen, it's really caught pretty much within the range of this big green candle for the last few days. So, very narrow range today. On a rally, 111.41 first level, then very strong resistance coming in at 111.58 to 111.63. If we do get through that, then 111.78. And if we do get through 111.78, then we're watching for 112.18. on a pullback. Strong support is going to come in about this 111.08 to 111.04. Then the next major level is 110.89. And if we do get through that, we're watching for about 110.67. US dollar, Swiss franc pulled back, found support from our GAN level, 12.5%, and rising trend line. So on a move lower, we're watching for the 96.74 level as key support. If that is broken, the next significant level we're watching for is our defining point, 96.40. Then we'll be looking to return to the 96.13 area, possibly a little higher, right around this 96.21 with this slightly rising trend line. Rally back up. The 97.18 is going to be key first resistance. Then we're looking at 97.24 to 97.29, where we have a declining 21 and a significant level. If we get through all that, then there's major resistance at this 97.35 area. Aussie US dollar caught on the lower end of our rotation zone and rotated back up, poking through our 25% GAN and then settling pretty much at the 8. So on a move back up on the following week, we're going to be watching for 75.82 first level of resistance, then the GAN level and the significant level coming in about 75.93. Then if we get through that, major resistance coming in about the 76.02 area. If we happen to pull back, 75.39 to 36 is going to be very, very key support. If that is broken, 75.28, then we don't have any support levels until we get 75.19 to 75.15. US dollar, Canadian dollar, still caught in this range. Friday was an inside day. So, on a rally back up, we're watching for very key resistance coming in about this 133.05 to 10 level. If we get through that, we'll be watching for a test of our significant level, 133.31, then the 133.43. Then above that, we have a 50% retracement level from this move coming in at 133.52. On a pullback, first support's going to come in about 132.34. Then we're watching for major support coming in at this 132.11. Then if that is broken, a retest of our significant level coming in at 131.87. Finally, US dollar, Mexican peso also rallied in the rotation zone and rotated back down. So on a continued move down, this next week we'll be watching for 1793.94 as first support, then the 1789.74. Then we'd be looking for our GAN projections lower coming in at 1778.20. On a move back higher, first key level we'll be watching is around this 1807.67 area, then the 1812.83, then possibly return to where this 21 is going to mesh in with the trend line coming in right about the 1821.39. That's all we have for you with this weekend update. Turning it back over to you, Bob.
Thanks for that, Michael. New Money Path podcast is out. Check it out at pattradingpartners.com or on iTunes or Google Play. Thanks for watching. Hit like and subscribe if you liked this, and we will see you in the next Path Chat. Cheers, everyone.